All right, as you can see from the thumbnail, inflation is roaring in Canada. I want to get into that very quickly today before we get into all of our stats. And please stick with me right to the end of the video because I have a new metric to show you that I think is going to be pretty valuable. Hey everybody, it's Rob Marsiglio here from the Robert Marsiglio Realty Group, back with another weekly Whitby wrap-up. Today we are focusing on June 19th to the 25th. If you're getting value out of these videos, I'd ask that you pause it real quick, hit that like button below please, and subscribe to this channel. I want to push this out to as many people just like you who are interested in learning more about Whitby real estate, GTA real estate in general. Once a month I do those updates too. But that's enough self-promotion. Let's get right into what we are talking about today. So this was covered a lot last week in the news, and I'm sure you all saw it, but the Canadian inflation rate is now at 7.7%, and that's the highest since 1983. I did a video kind of diving into this with one of my mortgage partners, took a macro look at everything. I'm going to link it right here in the top corner. You can check that out as well. The headline really is Canada's inflation rate rose at its fastest pace in almost 40 years in the year up to May, as the price of just about everything continues to go up and fast. So this is last week that this article came out, but Stats Canada reported an uptick in the price of gasoline was a major factor causing this overall inflation number. Gas prices rose by 12% in the month of May alone, and they're up 48% compared to where they were a year ago. Food prices were also a major factor in the upside, with grocery bills increasing by 9.7% over the past year. And within that food category, it's the cost of edible fats and oils that have skyrocketed 30%, and that's the fastest increase on record. The reason for that, Russia's invasion of Ukraine is a major factor in the uptick, as Ukraine is one of the world's leading suppliers of sunflower oil, and the war has caused a shortage of this pantry staple. To wrap things up with this annual inflation chart in Canada, it says here the Bank of Canada raises and lowers its interest rates to keep inflation in a range between 1% and 3%. So you can see that that's this range that's highlighted right here. We've been pretty good at keeping it in this range going back to, early 90s. But you can see that starting here, 2021, it started to really get away from us and just keeps going up. So all this being said, as inflation readings continue to come in, the Bank of Canada will respond with rate hikes, especially if we see our neighbors to the south in the US and the Fed down there doing the same thing. We need to keep our rate hikes in lockstep with what they're doing in the States so that we don't really devalue our currency in the process by keeping our lending rates lower than they are south of the border. We know July 13th is just around the corner, and that's the next meeting for the Bank of Canada. They will more than likely raise their rate by 75 basis points. Let's check in with where mortgage rates are right now at the time of recording, and then how this is going to affect the variable and fixed rate mortgages come middle of July. So these numbers are all as per Rate Hub. Once again, we have Bank of Montreal, TD, CIBC, RBC, and Scotiabank. And in this column, we have their 5-year variable rate and the 5-year fixed rate mortgage. So on July 13th, these numbers will not be affected directly by the increase in the overnight rate, but you can expect to see all of these rates here go up by 75 basis points really the day of as it's happening. So currently, the only 2 products or 3 products that you're qualifying for at the stress test level of 5.25% would be BMO, TD, and CIBC's 5-year variable rate. But come July 13th, you're going to have to be qualifying at somewhere around 6%, it looks like, because remember, this stress test qualifying rate is either 5.25% or the qualifying rate plus 2%, whichever is greater. And this is, again, to make sure you can handle the stress of increasing rates in an environment that we are currently in. As rates continue to increase, we can expect to see prices continue to come down. And this is where you get into this affordability equation. Yes, prices are coming down, but affordability is not improving because rates are still increasing. So this is by no means telling you to buy now when rates are low and prices are still on their way down. Definitely not what I'm saying. It's just that affordability is not becoming better. If affordability is going to stay the same, and you can only afford a house either at high price, low rate or low price, high rate, I personally would think the latter is a better option. The reason for this is that the price you pay for that home is not going to change over the entire time you live there, but that rate will fluctuate. So if you have to borrow a little less money, but pay a little more on the interest rates up front, when interest rates come down, at that point, At the end of your term, the rate that you pay when you refinance could be less than what you were paying when you first purchased the home. Therefore, your payment's going to go down. On the flip side, if you buy at a low rate at a high price and rates go up when it's time to refinance, the bill that you will be saddled with will be kind of more than you bargained for. Okay, so let's go through quickly what happened in Whitby Real Estate. Again, this is from June the 19th to the 25th. Okay, starting off with our new listings numbers, and like I promised, I put in some faded lines on every chart today, which is the 5-week rolling average, to give us an idea of trends, because it's kind of easy to see the trends when they're going upwards and down, but as you get these peaks and troughs, it may be a little more difficult to say, hey, our price is actually back on the way up, Rob. Look, there's a big spike here. This line kind of smooths it out, gives us the 5-week rolling average. So for this past week, we had 59 new listings on the detached side and 10 on the townhome side. So that's an increase of 1 in both cases. Sales is a more definite trend, I would say. If you could make an argument maybe that listings are kind of flattening out a bit, but sales, on the other hand, doesn't look that way. You can see that sales really peaked the 5-week rolling average in early March, even on the townhome side. And it's kind of been downhill ever since then with some of these fluctuations that we see week to week. So we had 19 sales on the detached side last week, 23 the week before. And on the townhome side, we had 5 sales versus 9 the week before. Our 5-week rolling averages are posted here. So again, we're coming in well below the 5-week rolling average for a couple weeks in a row now on the detached side. And this 5 sales this past week will pull down the 5-week rolling average next week as well. How does that all shake down with the median sale price? So on the detached side for this past week, the median sale price was $1.081 million. On the townhome side, it was $850,000. So you can see for a few weeks in a row, it looks like this 5-week rolling average hasn't moved much on the detached side, whereas we are still trending downwards in both markets. This is a messy chart, I know, but let's just focus on the numbers, okay? So 11 days on market was the average time it took to sell a townhome this past week, 10 on the detached side. I know these lines are all cluttered here. We have a lot of jumping up and down going. It's going to be a lot easier if you focus on this faded red line for detached. You can definitely see that things are sitting on the market longer. Same as with this faded blue line for townhomes. And I think this is important for both buyers and sellers. It's just all about expectations, people. So buyers, you do have a little more time to think. If now is the market you are buying in, you have some more time to think over your options. You're not being rushed to make a decision overnight. Sellers, we just need to practice patience now. We're not putting a sign on a lawn and it being sold the next day. We need to just be a little more realistic with the time it is taking to sell these homes. So that being said, if you have a timeline where you need to be, out of province or out of town for this next move, let's say a job is pulling you away, take this into consideration when you are planning your listing out. You may want to put this listing up a month earlier than anticipated to give it some time to be on the market to sell, because we are just seeing things. Again, you go back to February, we're averaging right around 5 days on market for both segments was the rolling average. And now we're up to, you can see 10.6 and 10.2. So that days on market has doubled in a matter of months, and the trend is just continuing to be upwards. Let's take a look to wrap up with our suspended and terminated listings. On the detached side, we had 20 suspended and terminated listings versus 25 the week before. And on the townhome side, we had 4 suspended and terminations versus 9 the week before. Our rolling average, we can see, suspended and terminated, they really peaked out in April, May, it looks like, and they've started to decrease throughout June in both cases here. But I do want to note that if you take the last 2 years as an average, we are still seeing more suspensions and terminations every week than we have historically, especially over the last 2 years in these wild markets. Going back to June 2020, 2 years ago from now, in any given week, you would expect to see 13.6 suspensions or terminations per week. Again, that's averaging out the entire amount of terminations over that time frame. On the townhome side, you're expecting to see about 3.1 suspensions or terminations per week. Even our 5-week rolling averages of 29 and 8 suspensions and terminations per week are still coming in at more than double what we would expect to see historically in the past 2 years. So while they are trending down, it is still higher than it has been in the frantic markets we've just come through, but probably a little bit healthier of a number. How about our other property types? We'll wrap up with this in terms of the listing sales. So semis, 3 new listings this week versus 4 the week before. 2 sales versus 4 the week before. That 5-week rolling average has come down around $40,000. We have 2 more active listings this week than last, but our months of inventory has stayed steady. Condo apartments, 8 new listings versus 3 last week. Just 1 sale versus 3 last week. Our 5-week rolling average dropped by, $80,000-ish. We have 6 more active listings on the market, and our months of inventory is up by about 1.3. And lastly, on the condo townhome side, 4 new listings versus 6 last week. 2 sales stayed the same. Our 5-week rolling average is up about $20,000. Our active inventory stayed the exact same, but our months of inventory is down from 2.14 last week to 1.86 this week. Showings activity, to keep everybody posted, we're down to 15.1 showings per new listing, so that's down 5.03 from May the month before. Our offers per new listing are down 7.55, 7.6 from May of 2022 as well. We're seeing less than 1 offer per new listing. To wrap up, as promised, this new stat, it just has to do with the number of showings it takes to get an offer. And this is very rough, and I'm just taking really the total number of showings and the total number of offers in any given month and kind of giving you the ratio of how many showings did it take to get an offer. Going back all the way to January, so let's jump in and look at what that looks like. So back in January, it would take you 8.7 showings to get 1 offer on your property is roughly what the calculation was. Let's remember that this takes into account properties that didn't get any offers, which is really going to drive this number up. That percent change has been positive. So it's taken you more showings to get a single offer. And you can see it hasn't quite doubled, but from January to now in June, we're up over 15 showings that you need on your property just to get 1 offer. Again, I think this is important for sellers right now. If you're not getting showings, chances are you're not going to get offers. And the way to get showings is usually 95% of the time comes down to pricing your home properly. It needs to show really nicely as well, but it always comes down to the price for the condition of the home. So let's really be aggressive with our pricing, especially if you're motivated and need to move. That wraps up another weekly Whitby wrap up. Please like the video, subscribe, turn on notifications, send it to a friend who is looking to move to the Whitby area or just wants to know a little bit more about what is going on in Whitby real estate. I do these videos weekly for you to keep you posted. I hope everybody has an awesome last week leading up to the long weekend. Please stay safe and enjoy it, and we will talk again soon. Cheers.